All right, let's dive a little bit deeper into all of the action with our markets reporters. Abigail, what are you watching?
Romaine, I'm taking a look at the dollar because, of course, the dollar had been on a pretty steep decline. Today, trying to hang on. Of course, the British pound did fall after the second vote didn't go through for Prime Minister Boris Johnson. And on that, we see a bit of a spike higher for the Bloomberg Dollar Index, but up just 0.1%. So really not a big move at all. However, it is the first up day in 6. I'm not sure what this chart says the Fed should do next week, but we do see overall an uptrend for the dollar index, the 200-day moving average rising, telling you the dollar bulls are in charge. But on the recent weakness, all of those down days, we see that the Dixie is hitting down on the 200-day moving average. It's not clear whether that support will hold or if we're going to go down closer to 97 and that support line, or maybe even through it. Lots of volatility like so many markets right now, Renita. But right now, the Bloomberg Dollar Index and the dollar index trying to hang on, Renita.
Abigail, I'll get right back to earnings. Looking at McDonald's, shares are at the lowest since June on disappointing earnings as its home market loses momentum. The chain is still struggling to pull more customers in its doors in the U.S. Now, sales rose but below analyst estimates. And McDonald's gets more than a third of its revenue from the U.S., by the way, where it's been having a hard time bringing more diners in, especially during the morning hours. Now, fierce fast food competition is pulling customers away. New products from Burger King, Dunkin' Donuts, and Wendy's have all come through. And as competition continues to heat up, the CEO has been heavily investing in technology. That's with deliveries on the app, license plate scanners to drive-throughs. More of these are conveniences that tech-savvy consumers have been demanding. Taylor?
Well, Renita, I want to take a look at the semiconductors because yesterday I talked about how the big fangs, given all the regulatory scrutiny, were really underperforming all of the other tech sectors. So today it's the semiconductors, which are the big outperformers, and that's what I want to talk about on a year-to-date basis. The SOX index is up 40% relative to the S&P 500's 19% gain. And then, as I mentioned yesterday, fangs, which are only up about 19% as well. And this is, of course, as we're really highlighting the SOX index, given companies and chip makers like Texas Instruments, for example, will be reporting after the bell. Now, what that means for valuations is a chart here that I'm showing inside my Bloomberg terminal. We're taking a look at the SOX index on a forward PE basis. You have to go back now about 10 years to get this type of richly valued levels here that we're seeing. In 2013, you're above 16 times, 2015 above 16 times, and now in 2019, we are well above that level, approaching 18 times forward PE earnings. So again, have to see how these earnings continue to roll out, of course, with Texas Instruments there to see how much higher we can push forward on these valuations.